The UK's Competition Authority this morning announced an investigation into Britain's big high street banks. With me to discuss this development is the FT's retail banking correspondent, Emma Dunkley. Emma, could you tell me what's this investigation all about?
Yes, so the Competition and Markets Authority is looking into the UK banking sector with regards to a lack of competition, specifically in personal current accounts and small and medium-sized business lending. They're concerned that there's both a lack of transparency and competition, which is ultimately leaving both savers and small businesses with a raw deal. So in that sense, it's tough for individuals to shop around and find the most suitable current account. And arguably it's tough for small businesses to get an efficient and cost-efficient bank account as well as loan.
Now, how long could this investigation take?
It's estimated that the investigation will take about 18 months. This is quite an interesting time period insofar as it will go a year after the next general election. Right. So some analysts are suggesting that perhaps this is a way of kicking at the issue into the so-called long grass by perhaps deferring the problem.
Because of course the Labour Party's got its own plans for the banks, hasn't it? Ed Miliband has talked about breaking up big banks.
Indeed, Ed Miliband has already said or mooted the idea that he would like to, if he becomes Prime Minister, carve out some more branch networks from some of the existing incumbent banks in order to create some more challenger banks into the market, which can sort of potentially undermine the stronghold of the existing 4 incumbents.
Now, you mentioned the challenger banks, Emma, and they were supposed to have solved the problem, weren't they, by providing more competition. What's gone wrong there?
Yes, the problem for challenger banks at the moment is they are quite small in scale. So a lot of them are quite new to market. For example, TSB, although it has been around for a couple of years, it's only just floated this year, and it has some quite it has some quite large headwinds actually in terms of it's still reliant on Lloyd's IT infrastructure, and therefore in order to really focus and innovate it has to become more self-sufficient first off. So in that regard a lot of these new challenger banks still have to grow and establish themselves and achieve scale in order to offer some really innovative competitive products that can challenge the existing offering in the market.
Right, and the Competition Authority, what sort of remedies could it order at the end of its inquiry?
Sure. So one of the things that the CMA has already said it is considering is relaxing the barriers to entry for some of these new challenges. So things it has done in the past, for example, is it's lowered the minimum capital requirement that these challengers need in order to get off the ground from 5 million to 1 million. However, some critics do argue that just because there are, say, 25 new challenger banks in the pipeline, it doesn't mean the more challenger banks coming to market, the greater competition there'll be. These challenger banks have to be effective and provide a new innovative range of products that can really challenge the existing offering available. Otherwise they're offering no such competition. And
just wondering what the reaction has been from the banks to all of this.
So far today, the share price of some of the large banks, such as Lloyd's, has fallen by 1% or more. This is very short-term reaction. However, they are suggesting that this is obviously an area that they will be working with a regulator on over the next 18 months. As mentioned, there is concern, however, among some of the analysts that this is an issue that will be simply deferred or fall into the background as a result of other regulations and other burdens that the banks also have to face, such as the ring fencing issue with regards to how they're going to siphon off their retail bank and all the costs involved in that. So there is some concern that this will just perhaps fade into the background.
So you think maybe in conclusion, Emma, that this review ultimately may end up not changing very much?
It's unlikely to have an extraordinary impact and introduce a significant amount of competition in the market. However, it's certainly a move in the right direction, and any plan to introduce further competition into the market is obviously welcomed.
Emma, thank you very much.